Good morning, people out there. MySpace secrets again. First, let me say thank you to all those people that helped the Australian bushfire disaster appeal. If you felt it in your heart to give, and you did do that, it's a very good thing. So if you were part of that, let me just say a big thank you. I know you can't talk to these people directly, but I'm sure they appreciate it very much. Okay, today I wanted to talk about the Hogs and Junkie theory. But before you wonder what the hell this theory is about my Hogs and Junkie theory, it fits in quite well with what has been going on in the last few weeks. But first, let's just talk about what has been going on. Seems like the Europe market is in the doldrums, the Asian market's in the doldrums, the Dow market has not done anything, took a little bit of a beating last night. Bloomberg is reporting that the UK economy is to see its worst slump since 1980. Geez, Bloomberg. Anyway, oil is sitting at about $37 US a barrel. Gold is still at $942. So it will be interesting to see where we go from here. But back to my theory, the Hogs and the Junkie. First of all, the Hogs are basically what I call the greedy stockbrokers out there that have been bullying investors. And they really pretty much care nothing more than making money off people. The big brokers, with the 50,000, 100,000 clients sitting on their database, they all know that all they have to do is make 4 to 5% of their clients on their database make a trade during the week, and bingo, like out of thin air, money, 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 precious money is in their pockets. Then you have what I like to call the junkies. So who are these people? They're basically the people out there that are feeding off all the bullcrap in the media and the government that are saying the marketing is bottoming. And just like a junkie, they get their high off the media, get back into the market drops back down, and then the feeling of a hangover comes again. Until the next bottom calling on the market, and this whole cycle starts over again. It really is amazing that there are people out there falling for this trap. But like I said a while back, it is time to just sit and watch. And then in the midst of all of this, you have the Treasury Secretary Timothy Geithner last week that was stung by domestic criticism for failing to provide details last week on just how he's going to plan on cleaning up the banks and all the toxic assets and all the lending. And Geithner was actually told off by foreign policymakers at the weekend to speed up the process on some sort of a solution. Why? Well, the problems are getting worse and working themselves into the economy at lightning speed, and it's out of the government's control. Just like I've been saying all along since I've started these videos, the problem is big and there is no quick fix solution. They are panicking. Now, I think it was yesterday, I was looking back in history on the Dow Jones and noticed something very intriguing to do with what the market is doing then and what the market is doing now and where we are historically. So let's go over now and quickly, and I'll go and show you and give you a look at the Dow, and I'll explain what I mean by this. Okay guys, as you can see here, this is a chart of the Dow. We're actually on a 30-year chart here. You can see the start here is 1985. Up until right now, what we're having a look at is what is happening currently on the Dow. If you can see there, from 1985 we had a pretty nice little run up there, and that was obviously the crash was around in 1987. Had a fairly nice bull market up there from 1995 to 2000. Then we had the .com crash, which was obviously pretty bad, and the market actually came down again. And if you remember from about it was 2003 all the way up, we had another bull market. But now look what's happening right about there. The Dow is actually sitting now at just under the 8,000 mark. But what is really interesting for me is if you have a look here, is we are now sitting on a very important level historically. We have lots of support here back in about just before 2000, lots of support here just before the bull market, and now up the top here, looks like we're coming back down towards this mid 7,000 level. Now in technical analysis, we call this support, and you would be expecting when the market comes back down here to bounce off. I would actually highly doubt that. I would say that we come through these levels here and it breaks and keeps coming down. How far we go, it's anyone's guess. But if we do break these levels here and go down to the 7,000 level, the market is in serious trouble. And with our charts, if you're unaware, you do normally find that history does repeat itself in the chart. So when we had that October round off, the market came up. What happened? The market broke down again. There was bottom calling, the market went up, and the market broke down again. So it is highly likely that we'll see more bottom calling, which we had. The market went up, and now we're down at this level down here. And if you have a look what happened, each and every time that the market technically brought up these sorts of levels here, what happened? The market broke down. That's where we're sitting at now technically with the market. So just a very important piece of information for you to filter there. But you know, in the coming days, the coming weeks and months, we will see the news not get any better, and we're likely to see another breakdown in the market like I've just shown you. But you know, we'll see what happens in the next couple of months. Okay, if you know anything about history, we always see it repeat itself somewhere down the track. And as astute investors know, we are in that time here, and something similar of like the 1914 collapse of the global equity markets, which actually started a shift in international trade and capital flows that lasted 6 decades. Yes, that's right, 60 years. And it really wasn't until the US went off the gold standard and capital flows were free to move that things actually changed. Prior to World War I, the global economy and capital flows surged during a golden era, and that was basically due to rapid technological changes and communication increases. Interest rates are relatively low, and emerging market spreads narrowed dramatically. Does this sound familiar? During the crisis, the world equity markets were shut down for 5 months. Yes, 5 months due to a massive liquidity crisis that forced the banks and companies and countries to raise capital. And you're now seeing the US Congress go through the same sort of things. A good example is the car loan industry. We're seeing a huge dramatic restructuring for the car loan industry. Plans and stimuluses and bailouts, they're simply not going to work. And another thing, how about the government that are fixing the big CEO payments and packages right now? Yes, that's it. Let's just fix the problem now after all these years of the big fat CEOs sitting back in their chairs and earning millions. They are now only thinking about doing something when the US is just like a car crash victim, in shock, and it's relatively too late. Now people, I think things will get interesting from here on in the next few months, probably starting towards the end of March, as some of the bigger companies start reporting and some of these big issues are actually brought to light. And we're going to see some more major failures in certain areas. It's imminent. Okay, that's it for today. I hope you enjoyed my video. I have been working hard the last few weeks, and I will bring you more, as you will know. And basically we're going to head deeper into the oblivion. There are lots of people out there that are desperate, and they are still choosing to turn their backs on the truth and what is really going on out there. So stay tuned. This is My Space Secret signing off. Peace, stay safe, and I'll talk to you all very soon.